Hi, welcome to Dig Into China. I'm Dong Shang. Thank you for tuning in. Your support means the world and plays a crucial role in the YouTube algorithm. Liking, sharing, and subscribing not only show your support, but also help YouTube recommend my videos to a broader audience. Thank you very much. In the recent days, data concerning the real estate sector for the first 2 months of this year have been unveiled. This includes the financial reports for 2023 from several major real estate enterprises. Hence, in this video, I aim to consolidate and interpret this information, shedding light on the strategies employed by the Chinese government to stabilize the real estate market. Moreover, I will delve into the question of how much further Chinese housing prices may drop before reaching a bottom. I've discussed the significance of real estate to China's economy on numerous occasions. With the local governments heavily dependent on land sales for fiscal revenue, a downturn in the real estate sector could lead to their financial collapse. This is why over the past 2 years, the Chinese government has been actively working to prevent significant drops in housing prices. Therefore, if we segment the timeline, considering the onset of China's real estate downturn with the Evergrande crisis as the starting point for the government's market rescue policies, it's evident that at least until the end of 2023, these measures have been relatively mild. Their primary aim has been to prevent a significant plummet in housing prices, slowing down the pace of decline. This strategy helps maintain stability in local governments' fiscal revenues derived from land sales, ultimately ensuring fiscal security. Let's examine the variations in land sale revenues across different regions throughout the year 2023. Without exception, the leading provinces in land sales witnessed a reduction in revenue during this period. In 2021, the nationwide land sale revenue amounted to 8.7 trillion yuan, which decreased to 6.7 trillion yuan in 2022 and further dropped to 5.8 trillion yuan in 2023. The relatively lesser decline in land fiscal revenue in 2023 compared to 2022 can be attributed to the Chinese government's introduction of numerous policies aimed at stabilizing the real estate sector. These measures were implemented to slow down the decline in housing prices and preserve the stability of land fiscal revenue. So the question arises, has anyone pondered how much Chinese housing price need to decline to reach a bottom? If you delve into the data provided by China's National Bureau of Statistics and the various reputable private real estate analysis agencies such as China Index Academy and the China Real Estate Information Corporation, aka CRIC, we'll notice that their findings suggest a minimal decline in Chinese housing prices. Let's take a CRIC as an example. They published the monthly price index for 100 cities. Yet the fluctuations in the index are almost insignificant. Surprisingly, in recent months, housing prices have even shown consecutive increases, given the impression of a real estate market revival. However, a closer look at the sales volumes reveals a different story, with major real estate developers experiencing a continuous decline in sales. Even industry giant Vanke, which boasts a relatively stable financial position, is struggling with plummeting sales, to the point where their cash flow is barely sustaining, putting them at the risk of bankruptcy. It's clear that housing prices in China remain relatively high, and the main reason for their lack of significant decline is the intervention of local governments. The logic behind this is straightforward. When housing prices are stable, it indicates that land prices remain stable as well. However, if housing prices were to plummet freely, developers would hesitate to invest in land due to the uncertainty. When local governments stabilize housing prices, they provide developers with a predictable outlook. For instance, after land is designated for development, if each square meter can fetch 20,000 yuan, resulting in total sales revenue of 2 billion yuan, with construction costs at 400 million yuan and the land costs at 1.2 billion yuan, there would still be a gross profit of 400 million yuan, making the deal viable. But without government intervention, developers face uncertainty. If a developer foresees a 50% drop in housing prices within a year, they may not be able to sell the property for 1 billion yuan, making land purchases above 600 million yuan unattractive. This is why local governments step in to stabilize housing prices. Additionally, since 2021, I've been monitoring the land auction market and noticed that local governments are adamant about not lowering land prices, while developer profits continue to decline. Consequently, developer interest in land auctions has diminished. So, what's the solution? Local governments have come up with a strategy, allowing developers to increase building density on a plot of land to offset profit decline. For instance, if initially developers were permitted to construct a 10-story building on a plot, they may now be required to build a 15-story building. Due to the unchanged land prices, this strategy aims to help developers sell more units and potentially mitigate the profit losses. Hence, the persistent rise in real estate inventory over the past few years is significantly influenced by local governments' unwavering stance on land prices. Presently, most private real estate developers have largely withdrawn from the land auction market, leaving only state-owned enterprises, central enterprises, and the local financing platforms in collaboration with local governments' land financial strategies. However, despite their financial strength, even state-owned enterprises find it challenging to sustain land acquisitions amid declining sales over the past 2 years. Consequently, many local governments have turned to their urban investment companies to procure land, establishing an internal cycle within the real estate sector. These urban investment entities raise capital through bond issuance to acquire land for development, thereby bolstering the local government's land finances. Nonetheless, this strategy faces imminent failure as the urban investment companies' debt surpasses sustainable limits. So, this year, the Communist Party of China has devised a new strategy to bolster the real estate sector. This narrative begins with a speech from Huang Qifan, the former mayor of Chongqing, earlier this year. Huang made a bold assertion at the start of the year, suggesting that if Chinese housing prices were to decline by additional 30%, local governments would intervene by initiating a significant housing repurchase program to stabilize the market. Essentially, his statement aimed to stabilize expectations in the real estate market. Everyone acknowledges the likelihood of housing price drops, but determining the bottom remains uncertain, heightening people's anxieties. Therefore, lacking a definitive expectation, people's outlook on housing prices tends to become increasingly gloomy. Huang Qifan did the CCP a favor by providing clarity. He effectively informed the market that a further 30% drop in housing prices would signify the bottom, as local governments would step in to purchase properties at that point. If this expectation becomes widespread, the prospective homebuyers who have been waiting on the sidelines will enter the market when prices drop to 70% of their previous levels. They understand that finding housing cheaper than this is improbable, and that the government will support prices at this threshold. However, is a 30% further drop in Chinese housing prices truly enough? At least by considering the trajectory of housing prices in Hong Kong, I don't believe it's sufficient. Over the past 2 years, housing prices in Hong Kong have already declined by 20%, and the Hong Kong government has promptly reduced taxes by 30%, effectively halving housing prices. If it takes 50% drop in Hong Kong's housing prices to reach the bottom, then where does the confidence in China's mainland come from? Assuming that a 30% drop would be adequate. Therefore, Huang Qifan's statement serves a certain purpose of stabilizing expectations, and while the logic holds, there seems to be some overestimation. I suggest considering the possibility that the housing prices may need to drop by another 50% to potentially reach the bottom. However, Huang Qifan's suggestion that the local governments would step in to purchase properties once housing prices reach a certain threshold is indeed valid. This strategy represents the second version of the Communist Party's market rescue plan, which commenced this year. Presently, the sluggish sales in China's real estate market can be attributed to two main factors. Firstly, housing prices remain relatively high as they have been restricted from declining significantly by government policies. Secondly, there has been a significant reduction in people's incomes, leading to a severe shortage of purchasing power. Looking at the recently released individual income tax data from the Ministry of Finance, it's evident that the personal income tax declined by 1% for the entire year last year. However, in the first 2 months of this year, personal income tax plummeted by a staggering 16%. Personal income tax data is a clear indicator of everyone's income status and it directly contradicts the lie of the National Bureau of Statistics regarding the growth of disposable income. The reason for the decline in personal income tax is due to the decrease in people's incomes. How can a decrease in income support an increase in purchasing demand? Therefore, the rules of the real estate market are about to change, and in the future, people may collectively rent housing. Let's envision a potential future scenario. Currently, the inventory of real estate stands at around 500 million square meters. When we sum up the top 100 cities nationwide, the average housing price is roughly 16,000 yuan per square meter. Let's imagine the government repurchases these properties at 8,000 yuan per square meter to clear the entire inventory, necessitating an expenditure of 4 trillion yuan. This is a significant sum. Even with the issuance of ultra-long-term government bonds this year at a rate of 1 trillion yuan annually, it would still take 4 years to cover the cost of these properties. Let's assume that the interest on these 4 trillion yuan is calculated at 2% per year, reflecting the cost of government bonds. Therefore, the Chinese government would need to generate at least 800 billion yuan in rental income from these properties annually just to barely cover the interest payments. Based on official data from the Chinese government, the average rental yield in 50 key cities in China stood at just over 1.9% in 2023, while in economically developed coastal areas, it hovered around 1.5%. With the government repurchasing these properties at half price, if rental income remains steady, the yield could potentially reach at least 3%. Consequently, this project should generate profits, right? In light of this, each local government can bundle these rental properties into REIT, real estate investment trusts products, and introduce them to the market. This would allow people across the country to invest in these financial products, offering a 3% annual return. Subsequently, local governments could recover their 4 trillion yuan financing, effectively freeing themselves from their predicament. Essentially, this represents the real estate market's 2.0 version of a rescue plan. However, as my previous calculation demonstrated, a 50% further drop in housing prices would be necessary for government long-term rental projects to generate profits, rendering Huang Qifan's proposed 30% decrease insufficient. Given the current state of the Chinese economy, local government finances are heavily dependent on land sales, and this dependence is unlikely to be relinquished. Therefore, the only feasible option at the present is to continue the real estate game. With the decline in people's incomes, the Communist Party also seems uninterested in prioritizing welfare issues. Consequently, relying on buyers to purchase properties is no longer feasible, leaving only the option of adopting a rental model. After all, despite the dwindling incomes, people still need rental accommodations. Housing is a necessity, whereas purchasing a house is not. Isn't that the case? Certainly, There may be those who argue whether buying a house is a necessity, with future mothers-in-law even asking about expenses like garage fees. However, in the face of harsh economic realities, any notion of traditional values must adapt. Even if you doubt the influence of the economy, consider this. If the Communist Party were to offer rental housing, they would undoubtedly shape environments and public opinions to sway people's value systems. If the gentle persuasion fails, they may resort to forceful changes, demolishing all tradition if necessary. This isn't some distant scenario. Individuals who lived through those times are still among us today. Therefore, the influence of future mothers-in-law pales in comparison to the party's power. If they opt for a rental model, they will find a way. However, this 2.0 version strategy also contains a fatal flaw. If the population continues to decline, the number of renters will diminish as well. Consequently, local governments will still need to sell land, leading to a continuous buildup of housing inventory. Therefore, local governments cannot indefinitely purchase properties for rental purpose. If the rental occupancy rate remains too low, the long-term rental housing project will incur losses, which the government will not entertain. Nevertheless, this is a matter for another discussion. At present, it seems to be the only viable solution for the Communist Party to salvage local land finances. Thank you for watching. Please like, leave a comment, and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.